Stocks and shares used to refer to stocks and chairs, the two best-selling products from medieval carpentry firm Robert Chiselhands and Sons. Of course, the stock market in those days was a different kind of place. Okay, that might not be fully accurate, and by that I mean I made it up. Stocks and shares are sometimes also known as equities and are traded on stock markets around the world. They make up one of the central pillars of the global financial system. But what are they? Well, stocks and shares are two words that often mean the same thing. They are simple financial instruments that entitle an investor to own a share of a company, as well as claim a share of that company's assets and earnings. Stocks and shares usually fall into one of two groups. First up is common stock. As the name suggests, this is the most common type of stock. As an investor in common stock, you will get voting rights for things like who should run the company. Good times. However, if the company is ever made bankrupt, then common stockholders are paid last. Bad times. Second up is preferred stock. As an investor in preferred stock, you will not get any voting rights. However, in cases of bankruptcy, preferred stockholders are paid before common stockholders, although not before debt holders. Perhaps the best thing about owning preferred stock is that you will receive a stable and fixed share of the company profits, known as a dividend. This is different to common stockholders who will receive a variable dividend, if anything at all. So that's stocks and shares sorted. So where do they trade? Well, they're traded at exchanges. Exchanges are venues that are designed to bring buyers and sellers together so that they can work out what the price of something is, kind of like any other kind of market. You've probably already heard of some of the more famous stock exchanges. Stock exchanges are split into two different markets. The primary market, where a stock or share is born as part of an initial public offering or IPO, and the secondary market, where a stock or share is traded after it has been issued into the marketplace. Exchanges exist to ensure greater choice, efficiency, and price transparency, in theory. There are loads of stock markets all over the world. However, stock exchanges fall into one of two different categories depending on how the trading takes place. Physical exchanges, as the name suggests, is an exchange where traders buy and sell, or trade, stocks and shares between themselves, face to face, on the trading floor, or pit. Physical exchanges are noisy, and so you're likely to see a lot of different hand gestures. Not those sort of hand gestures. Hand gestures are used to buy, sell, and make two-way prices. Physical exchanges are full of traders who are working for themselves, as well as those working for clients such as brokerages and investment banks. Electronic exchanges, on the other hand, rely on a computerized process to match loads of different buyers and sellers instantly from around the world, without the need for a physical location. Access is often secured through a third party, such as a brokerage firm, or directly if you're a member of the exchange. So why do the prices of stocks and shares move? Well, there's loads of theories as to what might cause a certain share price to go up or down. However, as with any other product that can be bought or sold, it often comes down to two factors: supply and demand. The supply of stocks and shares can be altered by stock buybacks and new issuance. In other words, new stock is now available. If you take these two factors out of the equation though, the supply remains fairly stable over time. Therefore, the most critical thing that will affect a share's price is the demand. Demand can be driven by financial performance, company management, industry performance, legal issues, government regulation, and market expectations. So there's your whistle-stop guide to stocks and shares. Here are some of the key things that you need to remember. Stocks and shares often mean the same thing. They entitle an investor to own a share of the company and can be classed as common stock or preferred stock. Stocks and shares are traded in stock exchanges. Exchanges are split into two markets: the primary market, where the stock or share is born, and the secondary market, where a stock or share is traded. The price of stocks and shares can go up and down. This is usually driven by supply and demand.